Hey, welcome everybody. It's John. It's time for a general market update. I hope everybody had a wonderful Independence Day yesterday on the 4th. Today is July 5th, 2024, and incidentally, it is my birthday today. So let's get into the markets. Again, this presentation is made by Rain King LLC for educational purposes. Here's our agenda today. We'll go over the indices in breadth, seasonality, rotation, and then we're going to go over a bunch of watch list names, and then we'll wrap up. Now, I'm recording this as of the close on July 3rd. The market is currently just open. It's about 9:40 a.m. on Friday the 5th. So as of the 3rd, here's the NASDAQ composite. And, we just hit all-time highs in this shortened kind of holiday week. We'll see what things do today. But what's interesting is maybe there's a little bit of a sign of life with some of the net new highs. I've noted down here, we're starting to a little bit of seeing some new highs, which is encouraging. So that's something we want to hope we can build upon. Now, here's the NASDAQ 100 equal weight, the QQQE. Now, this is important, I think, is, we've got this kind of long basing pattern, and you can see that it's gradually been tightening up, kind of a VCP, if you're a Minervini fan. Looks like, if we could get a breakout here out of this base, that would be good for breadth and really encouraging for maybe we get a little bit of a rally here in July. So that's an encouraging sign. On the S&P 500 sign, again, we're making new highs. And also, which is encouraging, is the net new highs on the NYSE. As you can see here, we've had 3, 4, 5 days of net new highs. Not super strong above 50 yet, but still, this is encouraging. We're seeing some improvement, and we want to stay in tune with the market. So a little brief bit on some seasonality. This is the July month, looking at the past 20 years, 10 years, and post-election years. So in the past 10 years is the orange bar. The main point here is big picture. July tends to be seasonally a strong month. So that's also in our favor right now. You can see here that we're going to end up going into probably two of the weaker 2 months of the year, which tend to be August and September. And then we'll roll into what is the strongest seasonal period, which is usually late October through January. So just a little bit of a nugget here on July tends to be an up month. Now, Carson Research put out a little bit of data regarding the S&P. When the S&P returns 20 or more all-time highs by the midpoint of a year, they looked ahead and said, well, what did the market do for the remaining part of the year? And you can see here that generally a positive sign that when you get new highs of 20 or more in the first half of the year, you'll get the second half of the year with some more new highs. And you can see the performance 3 months and the rest of the year. You can pause the video and take a look at this data. But what it's saying is the strong market should continue for the balance of the year with hitting some more all-time highs. So just a nugget. Again, we're trying to stack some edges. So let's go to rotation, rotation, rotation. We've been watching this closely. Here is the ARC Innovation Growth Fund divided by the QQQs. Again, we're looking at these because we're trying to understand if some of the growth funds are starting to outperform the Qs, because the Qs are so concentrated in NVIDIA and Microsoft and Apple that we're trying to see if we're getting some rotation. Now, this is the first sign a little bit that maybe ARC is starting to turn up a little bit, encouraging. We also looked at, this is consumer discretionary, XLY divided by the Qs. And if you've noticed, Tesla has exploded higher, and Amazon has also led the XLY turning up. So we're starting to see some outperformance here, which is encouraging. And last couple of weeks, we've mentioned that software, IGV, ETF, continues to show strong outperformance versus the Qs, which is a positive sign. Little pullback in the first 2 days of this week's trading. But again, this is a sign that there is some rotation. And we also looked at the equal weight Qs. So those are some positive signs. So let's get into a few watch list names of interest. I think there's really 2 categories. There's the leadership, which has primarily been the semiconductors and semi equipment, they are pulling back a little bit, digesting recent gains, but there also are some other names that are performing. So here's a series of names that are on my watch list. We're going to go a little deeper and look at the ones in dark blue, which happen to be CrowdStrike. We're going to look at Tesla, and I've also starred those because I have a position. And then basing, we always want to look at strong bases that are actually showing signs of accumulation. So I think some of these names are valid to be on a watch list of bases. And again, in this video, we're going to look at App, CLS, and we're going to look at GE. So let's look at a few of these. This is as of close on Wednesday. So this is Celestica CLS. It's formed this little base, kind of a coil, little triangle pattern. What I like about this one right now is the pattern's been tightening up, which is encouraging on low volume. And we're seeing it, maybe we're going to get a little bit of a handle. Maybe we'll get some tightness here with low volume. That would be constructive before maybe breaking out. And the relative strength line has been improving. So that's a good sign on Celestica as a good watch list candidate. And App 11, this is a daily chart. Again, as the market has been thin, this is really based sideways. So that's also encouraging. Probably the other quality that I like is the relative strength line has been getting more steadily improving as we get near a base breakout. So again, a good watch list candidate that might give you an opportunity. CrowdStrike, this is a position that I have. What's good about this particular chart is we've had this long base, and you'll see that we had that breakaway gap up that was right next to earnings. It was added to the S&P 500, creating some more demand. But I think what is really, really encouraging is the relative strength line has actually gone sideways in a weak market, but sideways in a weak market is okay. What's also constructive about the chart is you can see the last 3 weeks, the stock has pretty much gone sideways. And if you look at a weekly chart, it's actually formed a 3 weeks tight. So I think this is also really constructive action after a breakout. Now, this little day here, we had on, I believe this was Tuesday, it was kind of ironic. We had an analyst downgrade saying the stock price target was 400, but then we also had another analyst say the price target should be raised to 440. So I don't make a lot about analyst downgrades and upgrades. They usually affect the stock in the near term for a couple of days, but the stock's going to do what it does based on its earnings and sales. So to me, there's been a little bit of a dry up in the volume here as this digests sideways. To me, this looks very constructive that maybe it wants to move higher. So here's an oldie but a goodie. Tesla was all the rage back in 2020, but it's also come back here to form a base that's had a very explosive breakout. So just to try to break this down in case you missed this one, we had a nice prior uptrend, strong move with a couple of gaps with very big volume, 43% prior uptrend. So it's just telling you that maybe the character of the stock was going to change. And then the stock digested. And as it digested, it had some very positive signs. We have a tight base with accumulation in the base. And you can see here the price ranges have really tightened up in that base. And you'll notice that all of a sudden there's character change. There's support along the 50-day moving average here for a couple of months. So that's significant change to get this on your watch list. And if you were ready, this stock actually broke out. And you can see here there were signs of blue spikes all along that base. And if you were ready, the stock made a move, and it was very explosive. If you missed it, it's really extended. It's very dangerous to buy it up here because we might get a little bit of a pullback and consolidation. But if you caught it right, you definitely have been in gains very, very quickly. So Tesla looks like there's been significant change in the way analysts see the future. Now, Tesla is one of the companies that really is going to be one using AI, not a chip maker, but they're actually applying AI in their vehicles and in their support network for software and self-driving cars. So a lot going on here. If you didn't catch this one, you're going to want to wait for a pullback, and hopefully you have some techniques of how you buy pullbacks. So Tesla looks interesting here, and I have a position in this one. I also wanted to show GE Aerospace. GE, I had a couple questions come in about this stock. This stock has had a a turnaround. It's been had a really, really nice run. And the question is the stock run over, or is it, going to launch higher? So, the stock, and looking at the chart technically, it's formed this kind of sideways flat base pattern. And what I did is just using a hack that I use, a flat base hack. And if you want to know what that is, just go to my YouTube channel on May 9th, 2023. I shared this flat base hack, which is really quickly looking at a flat base to see if it's under accumulation or distribution. And basically, you just take the high and low of the pattern and say how many of the closes are above it in the upper half and how many closes are below the midpoint. In this case, we had 18 closes above the midpoint, 21 below the midpoint. So it's showing slight distribution, not severe. It's kind of a neutral pattern still. But I think that the other factor to look at is the relative strength line. As the market's gone to these new highs, you can see that the relative strength line of GE has actually been weakening. We're hitting new lows in the relative strength. So that's enough to stay away for it now, though it is being supported a bit at the 50-day. This could continue to build out and build into more of an accumulation pattern. But at the moment, it's kind of neutral to negative given the relative strength line. So just kind of a teaching moment. Go look at the flat base hack. It might give you a quick way to look at flat bases in the future. So let's wrap up. The shortened holiday week. We have indices that are hitting new highs, which is always a positive. We've been very concerned about breadth, but we still have the NASDAQ composite and the S&P above their 20-day moving average. So it's hard to be very bearish when that's happening. Now, I think the change we've seen this week is we're starting to see some new signs of improvement in net new highs. So it's not strong. It's very, very early, but it's improving. So that's good. The action of the leading stocks, as I mentioned, we've seen some signs of rotation and what groups and ETFs are showing that rotation. The semis pulled back a little bit, and they're also starting to maybe reassert themselves. So again, build your watch list. I've shared a bunch of watch lists, names, and we've looked at a few of these in a little bit more detail. I think exposure levels this week, given some of the signs we've seen, and what are those signs? Those signs are early net new highs. The Q equal weight is encouraging, maybe poised for a breakout. I think that's a reason to possibly move up the exposure by 10% to maybe 30 to 40%. Seasonality is on our side for July. Maybe we get a little rally here. So I think a few pilot positions are possible. So I've given you some bases to look at and some of the leaders. So a few pilots might be warranted here if you want to test the waters. Again, keep looking at these watch list names that are showing accumulation in their bases. QQQ breaks, equal weight breaks out. That would be a really encouraging sign that maybe we get a little bit of broadening of the market. So that's where we are. So the quote of the week is from Justin Mamis, a real market technician. His quote is, because the market anticipates, the more you know, the later it is. And the later it is, the greater the risk. There is no safety to buying on positive information or shorting on the bad news. Thus, all information has a negative bias against the price trend. I'd read that one a couple of times. Basically, if the news is obvious, you're probably late. So be aware of that when you hear about analyst upgrades and downgrades and information that's already out in the public. So Rain King Insights, again, a couple of final things we're trying to tighten up so the site works the way we want it to. If you're interested, send me an email at support@Rain King Insights. I'll be preparing an email with coupons on the launch for this entire distribution group. And again, take advantage of just checking out the site and sign up for a free membership. Doesn't cost you anything, but you will get access to these pages. If you don't sign up for the free membership, you won't get access to the free content. So it's coming very soon. It may be, I'll be launching it on a notice on my X as well as the distribution list. It could be literally any day now. All right. Thanks, everybody. It's July 5th, 2024, and that's the general market update. Have a great week and weekend, and we will see everybody again next week.